Yeah, hi. So, welcome to all our friends for having taken the time out and having attended today's session. Today's session is regarding a very interesting topic, especially when the markets are extremely choppy and dynamic, like today's session. तो आज का सेशन किसी ने भी अगर ट्रेड किया रहता, especially 2 बजे के बाद, it was a very challenging situation in the market. So today we will discuss regarding the concept of stop loss and Q stop loss एक बहुत ही important tool है trading में. We may not realize it when the markets are in a positive trend. जब भी sentiment positive है, you will not understand its value. But on days like today, when the markets are extremely choppy, that's when we truly understand the importance of stop loss and how it prevents us in protecting our capital. So, without wasting any further time, let's get started with the session. And Can someone else confirm if my voice is audible? Yeah, thank you so much. Yeah, so let's continue with the session. So session के end में we'll be having a Q&A and any of you who have any doubts regarding the session, please feel free to ask your queries at the end. So there is a very famous saying that amateurs focus on how much they can make while the professionals focus on how much they can lose. So if you see 90% of the traders fail not due to bad entry points but poor exits. So whenever the markets become a bit volatile or challenging, traders tend to panic and not close out their positions at the appropriate time. And that is one of the major mistakes in trading. If you do not close out your trade, there is a very good chance that your capital that you have built up over such a long period of time will get eroded at a very fast pace. That's why a stop loss is an instruction which is given to automatically sell or to close out the trade. So basically, stop loss is a protection. It's a tool in your trading armory wherein you close out your position if the trade is not going in your direction. ऐसा नहीं है कि अगर आपने 10 ट्रेड लिए तो 10 के 10 सही रहेंगे. There will always be 3 to 4 trades which will not go in your favor when the markets are extremely choppy. So in such situations, the concept of stop loss comes into picture. And today we will be discussing regarding the various types of stop losses which are there in the market, the dynamic types of stop losses, the static stop losses, all the different types of stop losses that are there, we'll be discussing, and how while trading in the derivative and futures segment, you can consider to hedge your position to reduce the losses to an extent. So, risk management is not only about preventing daily losses, but it is to tide over them and to trade another day. So, stop loss is very important because it helps in preserving the capital. अगर आपका capital है, that's only when you will be able to take the next trade. If while trading you blow out your capital, you will not have the opportunities to take the next trade itself. So no trader can control the entire market movement, but every trader can control their personal risk. So if you are able to control the risk at your level, to a large extent you will come out on the positive side. One second, I'll just try once again to. Don't worry, I'll explain all the concepts. There is a slight issue with uploading the PPT, but I hope the content is visible now. But I'll explain the content. So through the content, we'll have a good understanding of this session. So you are no more than one bad trade away from wiping out your capital. तो जब भी आप ट्रेड कर रहे हो, यू मे डू 10 to 8 9 वेरी गुड ट्रेड्स, बट अगर आपने especially options या derivatives में, if you do the mistake of not maintaining a stop loss while trading in options, there is a very good chance that your capital that you have made over 6 to 8 trades will get wiped out in one trade itself. So I have two basic rules about winning in trading as well as life. If you do not bet, you do not win. तो trading में आपको हमेशा कितना भी the markets are uncertain, you will always have to place the trade in order to at least have a chance of winning. If you do not place a bet, there is no chance of winning. But you should not risk your capital in such a manner that अगर वो particular trade गलत जाता है तो आपके पास capital ही नहीं है. So that those type mistakes should be avoided. The basic fundamental things should be taken care of at the traders level. Things to keep in mind before taking a trade. The minimum risk to reward ratio. This is very important कि जब भी आप ट्रेड ले रहे हो, you should see that at least there is a decent amount of risk to reward ratio. अगर आप ₹2 का रिस्क ले रहे हैं, they should be at least while taking the trade लेने के बाद the scenarios could change out, but at least while taking the trade you should be confident enough that रिस्क अगर ₹2 का है, there is at least a reward of 3 to 4 rupees on the upside. The maximum capital you are willing to lose per trade. So you should be knowing pre-hand itself अगर ये ट्रेड गलत जाता है तो आपका कितना कैपिटल मतलब can go on the wrong side. The maximum capital you are willing to allocate per trade. तो हर एक सेगमेंट में see there are certain traders who are comfortable trading in the cash market. There are traders who are comfortable trading in the derivative market. So you should know that based on your trading style and your capacity, what is the maximum capital that you are willing to allocate per trade. See, suppose you are trading in the cash segment on a daily basis. I am talking about a day trader. So on a general basis, he will have 4 to 5 trades which are open. It's not that only one particular trade will be open in the market. So you should know that what is the maximum capital that you will allocate for every individual trade. अगर आपके 4 trade open है, you should always allocate an equal capital towards all the 4 trades. It should not be that in one trade that you are allocating 1 lakh capital, in one trade you are allocating 10,000 capital, then in another trade you are allocating 50,000, and in one trade you are just taking a very small position of 4 to 5,000. That should not be the case. You should always equally distribute your capital across all the trades, because you never know कि कौन सा trade से आपको actually capital आने वाला है. Which trade is going to be on the profitable side is never known at the start. It is always decided once you are in the market, once the position has already been taken. Also, simultaneously, the maximum number of positions you are willing to open simultaneously. So there are certain traders who are comfortable trading just one position at one particular time, while there will be traders who are comfortable trading 4 to 10 positions as well. So that also depends on your capacity to trade, your trading style. All this is very important. So all these factors have to be taken into consideration. हर एक ट्रेडर का ये सब जो हम लोग क्वालिटीज डिस्कस कर रहे हैं, इट विल बी टोटली डिफरेंट. नो टू ट्रेडर्स will have the same psychology, the same capacity to trade, the same trading capital. So कभी भी दूसरे ट्रेडर्स से कंपेयर मत कीजिए. What is their ability to take a risk and what is their return on capital. Certain traders may say that they have a very high return on capital, but the amount of risk they might be taking also might be simultaneously very high. So all those factors have to be taken into consideration while comparing yourself with some other trader. Now coming to the importance of risk management in trading. Why do we say that risk management is important? See, look at this particular pyramid. It's a very, very classical example of how the risk reward is slightly skewed. So what it basically means in this particular example is, suppose you witness a 10% erosion of your capital. आपका आपने ट्रेड लेने के बाद ऑलमोस्ट 10% से अगर ट्रेड नीचे आ जाता है, then you require 11.11% to come out on the means to just to return to your initial capital. So suppose you took a trade at 100 and by 10% the trade goes wrong, so it comes to 90. From 90 to come back to 100 is 11.11%. Likewise, if you come down from 100 to 80, you require 25% to once again come back from 80 to 100. So that's the difference and the challenge while you're trading in the markets. It's by default that percentage losses are slightly skewed against a trader, and that is the mathematics of it. So by bad luck, if a particular trade goes from 100 rupees to 50 rupees, then to come back from 50 to 100 is almost 100% strike means risk reward which is required to come back just to your initial capital. It's not even coming back to profit, it's coming back to your initial capital. So once we understand all this, that is the time we get to know the importance of a stop loss while trading. So this is understanding the maths behind it is extremely important. uh, so that's why if you see, it's an extremely important concept to understand for all the traders. So that's why always maintain a strict stop loss if you're doing trading, day trading जब भी आप कर रहे हो, या फिर इंट्राडे, या फिर whenever you know that you're trading with a limited time frame. मतलब आपको मालूम है कि 10 दिन के बाद या 15 दिन के बाद आपको वो कैपिटल जरूरी है, then always trade with a strict stop loss. Now coming to the concept of risk reward ratio, what is meant by risk reward ratio? I'll just explain in this very simple example. So suppose there is a particular trade that you want to enter and the buy price is 100. So while taking the trade itself, you anticipate that the target on the upside is 808, and the stop loss that you are going to keep in the particular trade is 95. So the risk reward ratio, bhale the wording is risk reward ratio, actually it is reward divided by risk. So your reward in this particular trade is 108 and your stop loss that you are maintaining is 95. So it is 8 rupees on the winning side and 5 rupees on the losing side. So your risk reward ratio comes out to 1.6. That is the basic and simple understanding of risk reward ratio. And it is always important that your risk reward ratio should be above at least 1. So suppose you are a good trader and you have a good strike rate, then even if you have a risk reward ratio of 1, you will come out on the profitable side. Suppose there will be few traders who have a slightly bad strike rate, but if they have a very good risk reward ratio, there are certain traders in the world जिनका स्ट्राइक रेट सिर्फ 35-40% रहता है, लेकिन जब भी वो सही रहते हैं, दे आर रिस्क रिवॉर्ड रेशियो, आई मीन that time they are almost is almost 2:1 or 3:1. So even though they have a strike rate of 35-40%, they come out on the winning side in such trades. So understanding risk reward, understanding risk management, understanding strike rate, ये सब when we, it is a complete process. It's not a single one complete step. So it strike rate into risk reward will tell you whether you are going to be profitable or not. Likewise, even while you are selling in the market, suppose आप sell कर रहे हो, you decide to sell a stock at 100 rupees. The target is 93, the stop loss is 104. So in this particular trade, your reward is 7 rupees, your risk is 4 rupees. So 7 divided by 4, that is 1.75 is going to be the risk in this particular trade. So that's a very good risk reward ratio. Anything above 1.2, 1.3, it is very easy to tell that we should have a risk reward ratio of 2:1, 3:1. But to consistently come out with such particular trades is very challenging on a day-to-day basis. So having anything above 1.3, 1.4 is also a very good thing for a trader. See, even if for few trades, if you close it out cost to cost or slightly above cost, it is okay. But when you see on a larger basis, अगर आप 100 ट्रेड्स लेते हो, then definitely you should see that the majority of the trades have a higher risk reward ratio. So in that manner you will come out on the profitable side. This is once again a comparison of understanding risk reward and trade management, why it is extremely important. So in this particular slide I have shown that there is a trader who in a particular trade makes almost on the first trade itself 140% of the particular trade, and then in the next particular trade he loses 70% of the capital. And on the second side we have a trader who loses per particular trade, he wins 10% and loses 5%. It may look similar, but you will see that at the end of it the capital will be totally different, because coming down 70% and coming down 5% is a totally different ball game. So you can clearly see there is a trader one who has 1 lakh capital. The first trade goes correct, he makes a profit of 1,40,000. So initially his capital will go from 1 lakh to 2,40,000. That's because there is a 140% profit in his first trade. Then the next trade he makes a 70% loss on his capital. So from 2,40,000 the entire amount comes back to 72,000. Then again from 72,000 he makes 140% gain on the particular trade. So then again his capital becomes 1,72,000. In this manner he makes 5 trades, one profitable, one negative. At the end of it you will see that his capital is 37,324. Likewise, if we have a trader who makes 10% on a trade and loses 5% on a trade, in terms of numbers it may look very similar, means double. One is 140 profit and 70 loss, one is 10% profit and 5% loss. But it's totally different, because you can clearly see the maths is in favor of trader number 2, because the loss that he's suffering in each particular trade is significantly much lesser. And that's why out of the 5 trades that he makes, at the end of it he will still come out on the profitable side. So at the end of it, for both the traders, trader 1 will have just 37,000 capital remaining, while trader 2 will have a capital of 1,14,000 remaining with him. So clearly you should always maintain the appropriate risk rewards while trading in the market. Now coming to a very interesting theory which is there, which is also known as gambler's fallacy. It's a very common thing in trading psychology. So we'll just take a very simple example and understand the concept of gambler's fallacy. So this is about a trader who has a bearish view on the market. This is a slightly old example regarding Nifty itself. There is a trader who has a bearish view on the market. You can see the red arrows on the right hand side. That's when the trader considers to short the market. So there is a first scenario at 17,850. The trader considers to short the market. The trade goes wrong. So the market continues a trend on the positive side. So once again, the trader has a bearish view at 18,400, and once again he considers to short the market. Again the trade goes wrong. The markets continue their original trend on the positive side, but the trader is persistent and he keeps on having a view that the market should correct on the downside, and he continues to short it for 2 more occasions. That is, again at 18,740 he shorts the market, and again at 18,900 he will consider to short the market. On all the 4 occasions the trade goes wrong. So now what the trader does is at 19,500 he will consider to short the market once again, thinking that 4 times I have done a particular trade, I have gone wrong, but in the 5th trade I may have a higher probability. This thinking is completely wrong, because each and every trade is independent of the previous trade. It is just like tossing a coin. If you toss a coin, there is always a 50% chance a head will come or a tail will come. That's the same thing with trading. If you take it trade by trade, I'm not saying as a system, I'm saying trade by trade, you never know whether the trade is going to be positive or negative. So just because 4 trades have gone wrong, you should not double your capital on the 5th trade and try to short the market. So the particular trader, just because he has gone wrong on 4 occasions, considers to short the market for the fifth consecutive time by doubling his capital. So once again, his view goes wrong and his entire capital goes for a toss. So that's why do not aggressively change your position size to recover your capital. That's a very important thing. Just because आप एक या दो ट्रेड में wrong गए हो, it does not mean that you will double your capital and try to recover your capital. That's a very dangerous thing to do for a trader. So that's the concept of gambler's fallacy. It comes under one of the concepts of trading psychology. We'll be having quite a few sessions regarding trading psychology as well, of how traders should manage their capital, and what is the mindset that is required while trading, and what are the different fallacies that are there in trading side. Now coming to the very important concept of stop loss, we'll go one by one regarding the various stop losses that are there in the market. One of them is percentage based stop loss. Then we have a fixed point based SL. Then we have technical analysis based SL. Then we have fixed point for the option premium. That's when you're trading in the derivative side. Then there is a concept of time based SL, and then finally we have volatility based SL. So these are the 6 types of stop losses that we'll be discussing in today's session one by one. So first, coming to fixed point stop loss. Fixed point stop loss is one of the most simple concepts which is there. Most of the traders might be following this particular concept. Take the example that in this particular scenario, you take a trade at 92 rupees. 92 rupees is when you enter this particular transaction, and you maintain a 5 rupee stop loss. So that stop loss comes closer towards the levels of 87. 87.5 is the stop loss that you will maintain. If the price comes down closer towards 87, you will close out your position. But if the trend continues on the positive side, you maintain the stop loss level of 87 and you continue to hold on to your position. That's the most common and the simplest form of stop loss that is there in the market, and most of the traders tend to follow this particular method. So this is known as fixed point based concept based stop loss. Then we have another example of fixed point SL. So in this particular trade, the stop loss actually gets triggered on the downside. So the previous trade example was when the trade went in favor of the trader. He had maintained a 5-point stop loss and the trade continued on the positive side. This is an example where you maintain a fixed point stop loss and the stop loss gets triggered. So multiple times you can see in this particular example on the left hand side, multiple times when it came towards the support zone, there was a positive price action on the positive side. So the trader once again considered to buy when the stock so the trader once again considered to buy the stock when the price came closer towards the support zone. So this particular trade did not go in his favor, and there was a stop loss which was triggered because there was a price breakdown below the support zone, that is the trend line support zone जो हम लोग बोलते हैं. There was a clear breakdown on the downside and the stop loss got triggered. So this is the concept of fixed point based stop loss. This is another stop loss which is a technical pattern based stop loss, wherein जब भी आप technical में trade कर रहे हो based on technical price action or price patterns, if there is a breakdown below a particular price pattern, then we consider to close out the position. So this is known as a rectangle channel. You can see clearly in this particular example, the stock went multiple times, is trading multiple times within the channel itself. So what you do is you maintain the lower end of the channel. अगर उससे breakdown हो जाता है, because the trend is on the positive side, so you can clearly see the price entering into the channel, and then it goes into a sideways consolidation. So the lower end of the channel is taken as the stop loss level, and the upper end we continue. If the trend breaks out on the upper side, we continue to hold on to the position. So this is known as a technical analysis based stop loss. We can apply to any particular pattern, whether it's a symmetrical triangle, whether it's an ascending triangle, descending triangle, कोई भी chart pattern है. If you are trading it based on the technical parameters, you can maintain the trailing stop loss according to the pattern. Now coming to the concept of percentage based stop loss. So till now we have discussed regarding fixed point stop loss. After that we discussed regarding technical pattern based stop loss. Now we come to the concept of percent based stop loss. So in this particular method, suppose we take an entry at, for a simple example perspective, I'll just explain. Suppose you take an entry at 100 and you maintain 5% as your stop loss and 10% as your target. So that is known as percent based stop loss, wherein you will be maintaining a certain percentage of your entry level as the stop loss level. So 2%, 3%, it completely depends on the trader. So trader को जो comfort है when he is taking an entry into a particular stock, that is known as percentage based stop loss. दिस इज ऑल्सो वेरी कॉमन कॉन्सेप्ट. बहुत सारे ट्रेडर्स ये मेथड को अप्लाई कर लेते हैं, वेर इन दे मेंटेन अ परसेंटेज ऑफ द इनिशियल एंट्री पॉइंट. जो एंट्री पॉइंट है 2 to 3% ऑफ दैट पर्टिकुलर एंट्री पॉइंट इज टेकन एज द स्टॉप लॉस and 3 to 4% on the positive side is taken as the target. Now coming to another concept in technical analysis, that is known as ATR, that is known as average true range. So in this particular method, the ATR is a technical tool. बहुत सारे trading softwares में आपको मिल जाएगा. So in this particular method, the ATR values continue to rise or change based on the average volatility of the particular counter. तो जो स्टॉक वॉलेटाइल है उसका एटीआर ज्यादा रहेगा, जो स्टॉक कम वॉलेटाइल है उसका एटीआर कम रहेगा. या जब भी एक पर्टिकुलर स्टॉक में शार्प मूवमेंट्स आ जाते हैं, दैट इज द टाइम व्हेन द एटीआर goes into a change, means ATR बढ़ सकता है. So in this particular method what we do is, जो current ATR level है, we take 2 times the ATR or 3 times the ATR as our stop loss. So suppose the ATR in our particular example is 18.4. So 18.4 into 3, that will be the stop loss for this particular counter. तो स्टॉक चल रहा है 760 के लेवल्स पे. So 18 into 3 will be the stop loss for this particular trade. So somewhere around 54 points is the particular stop loss for the particular trade. So 760 minus 54, so around 704 is what is going to be our stop loss for this particular trade. So this is also a very good method when the markets are extremely choppy and volatile, to make use of ATR based stop loss in trading. So this helps when the markets are volatile. जब भी market उतना volatile नहीं रहेगा या sideways consolidation में रहेगा, that time the ATR values are on the lesser side, so automatically your stop loss will come less. But when the markets are extremely choppy and fast paced, that time your ATR values will be slightly higher. So this is a very good method for trading in a dynamic or a changing market. Now coming to the next set of example, that is known as moving average based stop loss. This is a very useful tool. जब भी trending market है, it's a very useful tool to make use of a stop loss, because जब भी trending, see in a sideways type of market, the moving average concept will not come much handy, because बहुत बार we'll have whipsaws जो हम लोग बोलते हैं, false breakout या breakdown बहुत बार हमें देखने को मिलेगा. But when the markets are extremely trendy in nature, a moving average based stop loss works wonderfully well. So here the trader uses the 20-day SMA in two ways. One as a confirmation to the trend line breakout and as a dynamic stop loss. So you can clearly see in this particular example, when the stock witnessed a breakout on the upside above the 20-day moving average, that's when we take a entry into the stock, and we make use of the moving average itself as a dynamic stop loss. तो जब तक प्राइस मूविंग एवरेज के नीचे वापस नहीं आ जाता और टेस्ट नहीं करता, we continue to hold on to the position on the positive side. So you can clearly see the stock was in a negative downtrend, and then it witnessed a positive breakout above the trend line as well as the moving average, and then we continue to ride the trend on the positive side. So till the time the stock does not breach the moving average, we continue to hold on to the trade on the positive side. So this is how you can make use of a moving average. See, different stocks will respect different moving averages. It's not that one particular average will work for all the stocks. You will have to try and test it. Some stocks will respect the 20-day moving average. Some stocks will respect the 50-day moving average. So it is a tried and tested method. There is no one particular average which will work out for all time frames and for all particular counters. But this particular method works out very good when the markets are in a trending phase. जो जब भी एक market एक particular direction, either on the upside or the downside, I am not saying always it has to work on the positive side. Even on the downside, there are quite a few examples that I'll explain, which clearly show that when the markets are in a trending phase, how you can make use of stock as the moving average as a tool for shorting in the market as well. So clearly you can see that this is a particular counter when it gave a breakdown from its support zone. Once again, we make use of the moving average as a dynamic stop loss level. So till the time the stock is trading below the moving average, we will continue to hold on to our position on the short side. So once we get a breakout on the upside, that you can see at the end or the bottom of the chart, when the price witnessed a positive price action above the moving average, that's when we close out the position. Till the time the price is below the moving average, we will continue to hold on to our short positions. So this is another example of how you can make use of the 200-day moving average to continuously short a particular counter. So in this particular example, you can clearly see whenever the stock has approached the 200-day simple moving average, it has continuously witnessed selling pressure on the downside. So this is a very good method to trade in the markets. You definitely have to make use of the other indicators as well, but a simple moving average works out beautifully in telling you that where there is support and resistance for a particular counter. So this is another example, the same thing. Most of the time we have seen examples of traders using it on the positive side, but a simple moving average, that is the exponential moving average, or the most simple common one, simple moving average, both of it can be made use of. But the EMA has a higher weightage in the market. The reason being, higher weightage is associated to recent time period. So that's why an exponential moving average is more common compared to a simple moving average. There are three different types of moving average. One is weighted, then we have that is the exponential moving average, simple moving average, or the weighted moving average. You can use any of it. It's based on your convenience, but the most common one which is made use by most of the traders is the exponential moving average. This is how you can make use of a moving average as a dynamic stop loss. Till the time the price does not close below the moving average, you continue to hold on to your position and trade it on the positive side. So this is also a very good tool to make use of in the market to continue holding on to your winning trades. बहुत बार ट्रेडर को ये कंफ्यूजन रहता है कि प्रॉफिट किधर बुक करना चाहिए. So till the time the particular counter continues to trade above the moving average, you can continue to hold on to your positions. Now coming to the concept of time based stop loss. So a time based stop loss is also a very good method. So in this particular system, what you do is you have taken a trade and you anticipate the trend to continue on the positive side. But what happens is, after a particular position has been taken, for the next 10-15 trading sessions, the stock goes into a sideways consolidation. So at that point of time, you do not know the trend is going to continue or there may be a reversal. So in such a type of strategy, what the trader does is he maintains a time based stop loss of 10 days, 15 days, or it is based on the comfort of the trader, बिकॉज ही हैज लिमिटेड कैपिटल. हर एक ट्रेडर के पास लिमिटेड कैपिटल है. So he must deploy it in a judicious manner. So if this particular trade is not giving him the desired result, he will shift out from the position and take a fresh trade in a new stock. So that is the concept of time based stop loss, wherein if there is no movement for a particular duration, you close out your position either on the positive side or on the negative side. A lot of traders who do option trading generally tend to do this. If there is no movement in a particular counter for an hour or so after taking a position in the options, they tend to close out their particular trade, because there is also the concept of time decay in options. It's not there in stock positions, but it's there in options. So a lot of traders, if the trade does not go in their favor for a particular time duration, tend to close out the position. So this is the concept of time based stop loss. And now let us take a few examples of why stop loss is extremely important for a trader in his trading journey. So this is the example of Reliance Industries. This is a slightly old example, but it's for from an understanding perspective of to understand the concept. So you can see in this particular example that the stock gave a breakout on the upside. All the technical parameters were fulfilled. That is, the volumes are above average. It's the volumes are above the short-term average. That is, RSI जो है, that is, which is an indicator of the momentum. That particular indicator is above the levels of 60. We have all the positive sides. So it's a triangle breakout on the upside, ascending triangle breakout on the upside. We have RSI which is above 60, volumes which are above average, and so the trader, based on this particular technical setup, would take a trade on the positive side. But clearly you can see from this that it's a failed breakout, and in technical analysis you can never tell which particular trade is going to come out on the winning side. So even though all your technical setup is positive, all the indications are on the positive side, you will never know which trade is going to be positive and which trade is going to be negative. So always consider to maintain a stop loss. A stop loss is one of the main tools that will help you in protecting your capital. However good the underlying stock is, if you are doing short-term trading in the market, always maintain a strict stop loss. Now coming to the psychology which is there, which is to be applied behind while maintaining a stop loss. Ego versus discipline. Do not let ego get the better of you. Always maintain proper discipline while trading. Trading requires an extremely cool and calm mindset. Mindset जो है वो सबसे important चीज है while trading in the market. You should be able to be extremely disciplined while trading in the market. नेवर लेट द फियर ऑफ मिसिंग आउट. कभी भी बहुत बार ऐसा होता है कि आपके सेटअप के हिसाब से कोई पर्टिकुलर काउंटर मिल जाता है, बट ड्यू टू सम पर्टिकुलर रीजन यू आर नॉट एबल टू टेक द पर्टिकुलर ट्रेड. सो डू नॉट लेट द फियर ऑफ मिसिंग आउट ऑन वन पर्टिकुलर ट्रेड affect your trading day या फिर particular setup, because there is always multiple opportunities in the market. It's not that there is just one opportunity. So never let fear of missing a particular trade disrupt your setup. Loss aversion bias. So for loss aversion bias also, it's extremely important. Do not feel that if you are trading that you will always be able to avoid your losses. Sunk cost fallacy, overconfidence bias, need for emotional detachment. These are some of the very common things which are there behind psychology of maintaining a strict stop loss. When we take up the sessions of psychology as well, trading psychology, we'll be discussing all these concepts in a much more detailed manner. These are some of the common mistakes. Yes, these are some of the common mistakes that the trader makes while trading in the market. The most important is after taking a particular trade to consider to move the stop loss. तो अगर आपने 100 रुपए पे ट्रेड लिया है और आप जब भी ट्रेड ले रहे हो आपने डिसाइड किया है कि 96 आपका स्टॉप लॉस रहेगा, but after some point of time if the trade comes slightly lower you consider to change the stop loss from 96 to 92 levels. ये एक बहुत ही बड़ी गलती है because on most occasions the price will continue to trend on the lower side. तो जब भी आप इनिशियल डायरेक्शन डिटरमाइन कर रहे हो या ट्रेड ले रहे हो तभी आपको स्टॉप लॉस डिटरमाइन कर रहे हैं, ना कि ट्रेड लेने के बाद स्टॉप लॉस डिटरमाइन करना है. नॉट मेंटेनिंग द स्टॉप लॉस इन वाइल शॉर्टिंग ऑप्शंस. तो जब भी ट्रेडर्स ऑप्शंस में ट्रेडिंग कर रहे हैं काफी बार ट्रेडर्स स्टॉप लॉस नहीं मेंटेन करते. दैट इज ऑल्सो अ वेरी डेंजरस थिंग टू डू. प्लेसिंग द स्टॉप लॉस टू क्लोज टू द एंट्री प्राइस, ये भी एक बहुत ही नेगेटिव चीज है. ट्रेडर्स को फियर रहता है कैपिटल लूज करने का, सो दैट इज वाई दे कंसिडर टू मेंटेन अ वेरी स्ट्रिक्ट स्टॉप लॉस जो हम लोग बोलते हैं. अगर ट्रेड लिया है 100 रुपए पे तो 99 98.8 बहुत ही छोटा स्टॉप लॉस के साथ कभी कभी ट्रेडर्स ट्रेड लेते हैं. बट इसमें क्या होता है, हर एक ट्रेड को एक ब्रीदिंग स्पेस जो हम लोग बोलते हैं वो जरूरी रहता है. नो स्टॉक ऑलवेज कंटिन्यूज राइजिंग ऑन द पॉजिटिव साइड ऑलवेज. काफी बार होता भी है, दैट्स अ वेरी गुड थिंग. अगर आपने ट्रेड लिया है और उधर से डायरेक्टली पॉजिटिव चलना चालू हो जाता है पर्टिकुलर काउंटर, दैट्स अ वेरी गुड थिंग. But on many occasions, the stock may go into a bit of consolidation after taking the particular trade. So you need to give sufficient breathing space for a particular trade and not maintain a very strict or very close stop loss to your entry price. The last is using deep SL to avoid getting hit. काफी बार ट्रेडर्स का ये माइंडसेट है कि हमको स्टॉप लॉस हिट ही नहीं करवाना है, तो बहुत ही बड़ा स्टॉप लॉस ले लेते हैं. मतलब ट्रेड लिया है 80, ट्रेड लिया है 100 पे एंड स्टॉप लॉस मेंटेन करेंगे 88 86. अगर आप इंट्राडे ट्रेडर हो और इतना बड़ा स्टॉप लॉस रखोगे then there is no point of it, because it's not that the stop loss will be hit or the target will be hit. On most occasions the trade will be within the range itself. So do not fear that if your stop loss is going to get hit. स्टॉप लॉस हिट होना इसका ये मतलब नहीं कि आप एक खराब ट्रेडर हो. इसका सिर्फ ये मतलब है कि वो पर्टिकुलर ट्रेड आपका चला नहीं आपके डायरेक्शन में, एंड देयर इज ऑलवेज मल्टीपल अपॉर्चुनिटीज इन द मार्केट टू ट्रेड इन. सो नेवर फियर अ पर्टिकुलर एसएल बीइंग हिट. इट जस्ट रिक्वायर्स अ गुड स्ट्रॉन्ग एंड अ काम माइंडसेट टू रिकवर फ्रॉम वन पर्टिकुलर बैड ट्रेड. बट अगर आप स्टॉप लॉस मेंटेन नहीं करोगे and your capital gets eroded to a good extent, to recover your capital is a very challenging thing. This is the example from today's trade itself. So clearly you could see for a major part of the day the index was trading extremely range bound. तो निफ्टी जो है, अगर आप 25,200 का कॉल ऑप्शन, आज का ही एक्सपायरी का ये मतलब आज का ही ट्रेडिंग सेशन का ये एग्जांपल है, तो ऑप्शन प्रीमियम 2 बजे तक ऑलमोस्ट 140 145 के आसपास ट्रेड हो रहा था. एंड देन सडनली हेवी सेलिंग प्रेशर केम अबाउट इन द मार्केट. सो द ऑप्शन प्राइसेस डायरेक्टली केम डाउन. कॉल ऑप्शन के जो प्राइसेस है they directly came down from 140 levels directly to 60 in a matter of just 15-20 minutes. So that is the speed and power of the market. So that's why जब भी आप ऑप्शंस में ट्रेड कर रहे हो स्पेशली हमेशा एक स्ट्रिक्ट या टाइट स्टॉप लॉस के साथ ही ट्रेड करना. सो जनरली जब भी हम लोग ऑप्शंस देते हैं हमारे साइड से, जब भी हम लोग एट द मनी के कॉल ऑप्शंस देते हैं, वी जनरली मेंटेन अ 20 to 25 पॉइंट स्टॉप लॉस ऑफ द ऑप्शन प्रीमियम. तो अगर 100 रुपये ऑप्शन, अगर 100 ऑप्शन प्रीमियम है 25,200 का, वी वुड बी मेंटेनिंग 20 to 25 पॉइंट्स एज दी स्टॉप लॉस. These are the some of the common price actions that we used to see in Bank Nifty as well. Markets are extremely volatile, so you can never tell how fast the market movement is going to come about. So in this particular example, ये Bank Nifty का है, पुराना थोड़ा example है, लेकिन it is from an understanding perspective that the option premium moved from 300 to 1100 and back again from 1100 to 300 400 levels. ये सब हो जाता है लगभग 1 घंटे के अंदर ही. सो इफ यू गेट द ट्रेंड राइट यू कैन मेक सिग्निफिकेंट कैपिटल, बट अनफॉर्चुनेटली इफ यू क्लाइम समवेयर राइट एट द टॉप, अगर आपने एंट्री जो है अगर ऊपर के लेवल्स पे लिया है, देन इट बिकम्स अ वेरी चैलेंजिंग थिंग. सो you should always maintain a stop loss when trading in index options, especially the more volatile ones, जैसे कि सेंसेक्स हो या बैंक निफ्टी हो. These are much more volatile compared to Nifty. In all index options, you should maintain a stop loss. But I'm just highlighting that Sensex and Bank Nifty, because of their large base, they are much more volatile in nature compared to Nifty. ये एक और एग्जाम्पल है ऑफ द प्राइस एक्शन दैट वी सी ऑन अ रेगुलर बेसिस इन स्पेशली ड्यूरिंग द वीकली एक्सपायरीज जो रहते हैं. अभी तो बैंक निफ्टी का वीकली एक्सपायरी नहीं है, बट वी हैव 2 weekly expiries. One is for Sensex and one is for Nifty. So whenever you are trading in options, please do maintain a strict stop loss because the price action can be very fast. Cash may you will very rarely see such type of price actions wherein the price will move from 100 to 300 and then back again to 300 in a matter of minutes. It's always in the option segment that we get to see such type of price action. Now coming to a few of the strategies that a trader can consider. See, stop loss is one thing and strategies is another thing. Especially जब भी आप options में trade कर रहे हो, strategies helps in as a method of reducing your losses. It's similar to a stop loss itself because some of the strategies predefined जब भी आप implement कर रहे हो तभी आपको मालूम रहता है कि आपका maximum loss कितना रहेगा और आपका maximum winning, if you are on the winning side, what is going to be your maximum profit. So some of the strategies work in the manner of a stop loss itself. So spread strategy. So instead of, this is the current chart structure of Nifty itself. So there are traders जिनका view रहेगा कि market may witness a correction on the downside closer towards the breakout point. So 25,050 के आसपास Nifty का breakout आया था. And then once again we are going closer towards that point from the past 2-3 trading sessions. So instead of directly buying a put options overnight, अगर आप इंट्राडे कर रहे हो फिर भी आप स्क्रीन के सामने रहोगे, यू कैन ऑलवेज क्लोज आउट योर पोजीशन. बट इफ यू वांट टू टेक एन overnight short position in the market, it's always better to do it in the form of a spread strategy rather than a direct naked buying of put option. Spread because it reduces the cost. So today, if you see instead of buying a direct put option, you can do it in the form of a spread strategy. So in a spread strategy, what you do is you buy the at the money put option, that is 25,200 put option you will be buying, and you will be selling a slightly out of the money put option. So 25,000 put option you will be selling. You sell the put option to reduce the cost of the transaction as well as the margin requirements. So that's how a spread strategy works out. It's a very good trading strategy when you want to carry forward your positions to the next trading day. मतलब ओवरनाइट का जो रिस्क है वो रिड्यूस करने के लिए a spread strategy is much better compared to naked buying of a call and put option. So now coming to future hedge strategies. तो future hedge strategies is a strategy wherein you simultaneous जब भी आप future में position ले रहे हो, that is either on the long side or the short side, you simultaneously you will be taking a put option as well. तो इसको हम लोग combo strategy भी बोलते हैं. तो मान लो निफ्टी चल रहा है 25,300 के लेवल्स पे, निफ्टी फ्यूचर चल रहा है एंड आपका व्यू पॉजिटिव साइड पे है. आपको लग रहा है कि ये लेवल से मार्केट वापस रिबाउंड हो सकता है पॉजिटिव साइड पे. सो व्हाट यू डू विद बाइंग द फ्यूचर, यू साइमल्टेनियसली बाय द पुट ऑप्शन एज वेल. So you buy 25,300 put option and you buy the futures at 25,300. तो अगर आपका व्यू सही हो जाता है और मार्केट आपके डायरेक्शन में चला जाता है, then the put option does not come handy. It's only when the trade goes wrong, that's when the put option comes into the picture. So it's something like an insurance जो हम लोग प्रीमियम इंश्योरेंस प्रीमियम लेते हैं. If everything works out good, we do not need to make use of the insurance. But if something goes bad, and then that's the time the insurance comes into the picture. That's how a combo strategy also works. Suppose the market goes on the positive side, आपका व्यू पॉजिटिव था और मार्केट पॉजिटिव डायरेक्शन में जाता है, then you end up on the positive side, you make profit through the futures itself. But if the view goes wrong, and that happens many times for a trader, and if the view goes wrong, that's the time the put option comes into picture. So अगर इंडेक्स 25,300 से ऊपर नहीं जाता, नीचे के डायरेक्शन में 500 पॉइंट्स का करेक्शन आ जाता है, I will be making 500 point loss in the futures segment. But because we have simultaneously purchased a put option, we will be making a profit of 400 points on the put. The cost of the put has to be minus. So total cost that we'll be making, profit that we'll be making is 400 in the put option. So net our loss will be 100 points in this particular trade. So that's how a hedge trade works out. Your loss, if you had not taken a put option, and if the market's corrected 500 points, your loss would be 37,500. But since we have purchased a put option, in our particular scenario, we end up making a loss of 7,500. So that's a huge saving that we make in this particular trade. तो जब भी आपको ओवरनाइट फ्यूचर्स में पोजीशंस कैरी फॉरवर्ड करना है, it is better to do it in a combo strategy, that is simultaneously buying a put option as well along with your futures. तो अगर आप, this is for the long side, अगर आपको short करना है market, you will be shorting the futures and simultaneously you will be buying the call option as well. तो hedge जो हम लोग करते हैं, we do it in the direction of the fear. तो हमको ये particular example में fear था downside risk का, so that's why we buy the put option. If the fear is of the markets going on the upside, that's the time we'll be buying a call option to hedge your position, that is. This is just the examples of the different strategies along with their risk levels that are there in the market. So always selling of options has higher risk compared to naked buying of call and put options. Selling because there can always be a sharp movement in either direction, and there could be significant losses for the option seller. These are some of the key things that a trader should always consider while trading in the market. That is always maintaining a strict stop loss. जब भी markets excessively volatile हो जाता है, that is the time to consider to reduce down on your leverage. And जब भी आप overnight positions करते हो, derivative segments में especially, always do it with a hedge strategy manner rather than naked buying of call and put. So with that, it's an end of today's session. I'll just quickly take a few questions regarding the content. So if anyone has any questions, you can please post it. We'll be more than happy to take your queries. So there is a question from Murthy sir. So using the same strategies, would institutions hunt our stop loss? See, there is no control over that. We as we do trading, there is always the fear that there will be large institutions who do stop loss hunting. It's a very common thing in the market, but that's where you should take calculated risk. You should time your entry in such a manner that you are doing it after a particular clean breakout has happened, or post someone else's stop losses have got triggered. There many times when you look at the option charts also, you will come to know that the it has breached a particular support zone or a resistance zone and then reversed on the opposite side. So those are entry points which have good risk reward as a trader. So stop loss hunting, it's bound to be there in the market. There is nothing we can do about it. We should just take clean entry points where we feel that we have a good risk reward, that if we take an entry at that particular point, we'll come out on the positive side. So there is a question from Sachin. In today's session, after 2:15 p.m., Nifty gave a sudden downside of 100 points. So the thing is, there are always such situations which happen in the market. You should predefine your support and resistance levels on the chart itself. So when we look at the charts, we generally trade on a 5-minute time frame. If you take a higher time frame, it's very difficult to capture it. So suppose you take a 15-minute time frame to capture the 100 point, by the time the candle formed itself, almost 70-80 points will have been gone. So ideally, if you are a scalper in the market, if you are trading the index, ideally a 5-minute time frame is a good enough time frame. uh, when such sharp movements come, it's you have to react towards it. You maintain your you maintain the levels, that if this particular level is breached on the downside, you will be taking a short position in the market. So once you looking at few stocks, also looking at the price action of the counters like Reliance, HDFC, ICICI, all these stocks were on the negative side, clearly indicating pressure in the market. And on a day like today, after the index was had recovered almost 150 points, once again when it comes closer towards the low point of the day, there is a good chance that the low point will be taken out. So that's how you trade, that you anticipate that the low point of the day will be taken out, and that would lead to further selling pressure. A lot of people would have maintained today's low as the stop loss, and once that gets triggered, further selling pressure comes about in the market. There is a question that how did we react to the market? So today we had given the first few trades were on the positive side in the market. Our first call was on the buy side. Even our second call was on the buy side. Our third call also, if you see, was relatively all the starting calls were on the buy side. And post that we gave the last call was on the sell side. That is, we had given a put option reacting to the price action. So in total, in all, we had given 5 calls today. 3 of them came out on the positive side, 2 of them went negative. So it's very tough on such days when it's not a trending market. The markets post almost 11 to 2 o'clock were in an absolute sideways consolidation zone. So that time the option premiums tend to decay at a good speed, because tomorrow is the expiry for the index as well. It's all about maintaining and managing the risk, and where you consider to close out your positions in such particular trades. Yeah, thank you. So that's a wrap of today's session. Thank you to all our friends for having taken the time out and having attended today's session. I hope I was able to convey the content in a very simple manner. Please do understand the importance of stop loss when you're trading from a short-term perspective, especially derivative side. Even intraday cash, e-margin, all these products, if you trade it and you manage your risk efficiently, definitely in the long run you will come out as a much more successful and a profitable trader. Thank you to all our friends for having taken the time out for attending today's session. Thank you.